Hey everyone, SoFi reported quarterly earnings results today that sent the stock price down more than 10% as of this recording. Coming into the quarter, I had upgraded SoFi stock to a buy a few weeks ago, and I'm going to review these earnings results and update my buy recommendation for SoFi stock. So you're going to want to tune in to see if I'm upgrading, downgrading, or reiterating my buy recommendation for SoFi. So let's take a look at the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so like I highlighted, I had upgraded SoFi stock to a buy, and then I reiterated that recommendation. I last updated that recommendation on April 2nd, reiterating that buy recommendation for SoFi stock. There was a lot I liked about the progress the company was making on profitability, and that's what had me upgrade SoFi stock. So let's see if it's maintained momentum in the key areas I'm looking for in SoFi. So management saying that they delivered adjusted net revenue of 581 million, representing 26% year-over-year growth. Interestingly, lending segment revenue was flat given a more conservative approach in light of macroeconomic uncertainty. This was a key area I was watching. Management told investors that it was going to pull back lending in 2024. So I was expecting a decrease in lending segment revenue, but it was actually flat. Now, coming into the earnings preview, I highlighted for SoFi stock investors that the first 3 months of the year or the first 4 months of the year have gone much better than expected in terms of macroeconomic performance. Job growth, layoffs, consumer spending, all of which have gone much better than many economists were predicting heading into the first 4 months of the year. So given that better performance on macroeconomic conditions, I was interested in seeing how SoFi adjusted to those conditions. And it looks like, as I'll show you a little bit later, SoFi didn't make very many changes. They were coming into the year with a conservative approach, expecting macroeconomic headwinds because of higher interest rates. And SoFi wasn't convinced that the year is going to turn out better after the performance in the first 4 months. So they held on to their conservative outlook for the year, even though the first part of the year has turned out better than expected. Now, it remains to be seen whether that was a prudent decision or not, but it's just what management decided to do to sustain their outlook for 2024, even amid the changing data that came in for the first 4 months of the year. So, one of the reasons why SoFi stock has been under pressure of late, even though their performance has been good, is the capital allocation decisions or capital structure decisions. These have to do with debt and equity issuance, and the company CEO suggesting that they did two big things in the quarter. First, they issued 862.5 million of convertible notes that are due in 2029 at a 1.25% coupon rate to reduce overall financing cost. And second, they exchanged 600 million in principal of their convertible notes due in 2026 for shares of SoFi common stock at a notable discount to par, which further strengthened their balance sheet for long-term growth. So let me take these two moves one at a time, starting with the issuance of convertible notes that are due in 2029. Now, what this will do for SoFi is it will increase the potential for shareholder dilution. If SoFi stock performs well between now and 2029, then those investors that hold these convertible notes will exchange their notes for shares of SoFi stock, which will dilute existing shareholders because there will be more shares outstanding. So the profits will have to be split among more shares. But what this does for SoFi, the company, is reduce its risk because it will only have to exchange those notes into equity if the company performs well. So it lowers their cost of financing because it provides the lenders some of the upside. Usually, when you just lend to a company, you don't participate in the upside. If you lend the company, let's say $800 million at a certain interest rate, the most you can get back is that interest rate. But if the company's stock price soars, you don't participate in that because you've only lended to the company. You don't have any exposure to the upside. With the convertible note, it is a lending facility and it gives the lender the upside of if the stock price increases, we will get the upside as well. So lenders would be willing to lend at a lower interest rate in exchange for participating in some of the upside. Okay. The second one, they exchange 600 million of their convertible notes that were due in 2026 for shares of common stock right now at discounts to par. So these were convertible notes like the one I discussed earlier that SoFi had issued previously. And since SoFi's stock price has not performed exceptionally well, these lenders that hold the convertible notes were willing to exchange them at a lower price today because their chances of upside have diminished considerably over the time that they've held these convertible notes. So at this point, with SoFi's stock price struggling, they were willing to exchange that upside in order to get their money back. So those are the two big decisions that SoFi management made during the quarter, and investors were not pleased with these decisions. They were not pleased because of the potential for shareholder dilution in the first case here. So management continued saying that total deposits grew by a record 3 billion, which was up 16% in the first quarter, to 21.6 billion at quarter end, with over 90% of SoFi money deposits coming from direct deposit. And SoFi encourages this by offering very high interest rates, APY, for customer accounts that come with direct deposit. So that encourages people to switch over because Bank of America and JP Morgan Chase and other big banks give you close to zero for having money in their account. So SoFi tries to get those customers by offering them higher percentage yields on their accounts. And then once they get you into their ecosystem, SoFi benefits by selling customers other financial products that they offer. And they said they continue to benefit from that trend. So the growth in these high quality deposits drives lower cost of funding for their loans and increases their flexibility to capture additional net interest margin and optimize returns, which is a critical advantage in light of the macroeconomic uncertainty. And that's true. SoFi is in the business of getting money from customers' deposits and then lending that money and making a spread on that exchange, what they pay customers versus what they charge other customers in lending. And that spread is what SoFi is in business for. That's the bank. That's the business model of a bank. A lot of talk is coming around SoFi's technology and its other segments, but how well it does at getting money from customers and lending money out is largely going to determine the success of SoFi for investors, and it's getting better and better at that task going forward because it's getting more and more deposits from customers, and those are lower cost funds, and then it's able to lend that money out at higher and higher interest rates. So overall, SoFi made solid progress in the quarter in the key area I was looking for, in the key areas I was looking for. And coming into the quarter, I had already rated SoFi stock as a buy. And then given that the stock price is down more than 10% following the earnings results, combined with the progress they made in the quarter on several of the key factors, I'm reiterating my SoFi stock buy recommendation here. So to answer the question, is SoFi stock a buy on this dip? I think so. I think SoFi stock offers investors a good risk versus reward. Even though it is more risky than the average stock, I think the potential reward is worthwhile for SoFi stock investors today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.